Hey folks, welcome to the Market Internal Review for August 16th, 2023. Quite an adventurous day today. We started out with a gap just shy of 50 cents on SPY. SPY saw some decent selling from the open to the close. We dumped about $3.33. Today we started out with, per the MIRSI indicator, a bullish market. Now, this was interesting given that SPY actually had a small gap down. We also opened up with almost no tick, and the price and the volume for the market was somewhat mixed. We did have trend in an imbalance. We also see the average tick closures trending towards the upside. We did have that small little push yesterday off of well, I shouldn't say off of this, but the MIRSI squeeze signal lit up yesterday. So that was a nice little move there. We had, I think, about 65, oh no, gosh, almost 90 cents off of that little signal. So that was neat. So we opened up right at a gap. We're holding it. This candle right here sure makes a statement, closing right at the mid of the gap. And you see these next two candles holding the mid of the gap. No sign of cooling off here per the MIRSI indicator, and all of the tick thus far, starting off at the low end of bear neutral, starts to trend up towards bull neutral. Then we break and fill this small gap and head right on up and stop right on previous day's TWAP price, which is roughly 444.18. Still, by about 10 o'clock, we haven't really seen much of tick at all. We start to have a little bit of a divergence here across all four measurements and their 20 SMA trends, all of them kind of diverging as we head back into this pocket. We essentially start to oscillate. We lose trend imbalance. The divergence between SPY and the New York Stock Exchange closes up by about 10:30, and we're somewhat stuck right here around TWAP, in between previous day TWAP and the lower first standard deviation price. We oscillate that darn near all day. We wick the high of this candle's 444.16. Okay, we straight actually wicked. I didn't realize that. We wicked this exact price at 11.04. We were 2 cents shy there, 2 cents over there. Very interesting. So more confluence with that TWAP price. It is very important. We get this little hint of an imbalance again. Prior to that, actually, we had the tick closing down. We had that over here at the highs. I believe that was roughly about the time I sent a tweet out saying I would expect a pullback because we had such a strong movement on SPY, but we had no tick to back it up. There was nothing here for it. And SPY is mostly diverged from the rest of the market, and we did receive that pullback. Once we finally made up our minds, apparently, that we're not going to break TWAP price from Thursday, we're not going to hit expected move high from the options market, and we're certainly not going to get anywhere near this weekly gap up here that was created at the open of this week, I believe. We start chopping down into the lower standard deviation of current TWAP on the session. And amazingly, we hit trend imbalance again, but this time notice the price and volume direction of the stock exchange is bearish. Very sad for the bulls. We kind of got a little hint of that. Notice how in the morning, finally they show up, most of the extreme ticks that are breaking 500 are all on the bearish side. This one made not necessarily a new low for the day, but it did head back down and cleared this very bullish candle almost completely. The next bear ticks essentially started to land all the way back the same region here. So I'm watching that to see, are we going to have sustained weakness in this area? It seems to be the area of confluence, or are we going to accept and rise up? Every time we see these candles pushing back over this zone, there's no tick to back it up. The New York market is not strong, but yet SPY is pushing back up. We see this really weird combo where we get this strong tick and we've made a higher low between all these other ones. So the rest of this time, I'm kind of just hands off. All I know is this is incredibly bearish, that we're not heading above the previous day TWAP. When you can take the TWAP session from the previous day and you plot it as a range like we do here, if we're not above the point of confluence here, the point of control, the POC, the TWAP line here, we're essentially, unless we're extremely extended to the downside, there's no reversal set up. So when you're looking at this, you should be thinking bearishness at this point. Shorts are going to be in favor unless we can vault over and accept this. But then we've got the options market to deal with. We've got weekly time frame players to deal with. And we got previous day's range traders. So that's the only thing that would make me a buyer, is down here at previous day low, if it can be held. But it has to show me strength when we arrive here. And sadly, with the triple rejection, by the time we get back down here, we've already lost a gap. We've rejected this. There's not really going to be a good way to be bullish from previous day low, not with structure like this. If we started down here and came up, maybe. But we didn't do that. We also had FOMC today, so shenanigans abound. Once we break down TWAP, we break down this range, we clear this gap. I mean, we just really did everything possible to show everyone that today is a day for selling. We do receive some squeeze signals here on the MIRSI indicator. And I'll be honest, I definitely flipped around a little bit on my assessment, because this, well, one, this is still a new study that I've released it, but it's still new, so there's still things to discover. In the release video, I mentioned that when we have a high divergence, we squeeze in here at this low divergence area, and then we see these squeeze signals. If we've had recent high divergence, it can be a setup from limited backtesting, but it can be a setup for reversal setup. How many times am I going to say setup? we kind of get it back to previous day low, but then we reject. So I think there's going to have to be some kind of measurement. How much historical divergence data do you use when making the assessment of, is this a reversal squeeze because we had high divergence over here, or is this a continuation because the most recent data, I mean, a good hour at least, is nothing but flat, basically no divergence whatsoever, and a convergence. Because if that's the case, then you'd see something like this. Obviously, you don't short from here with tick so extremely in the bearish area. This, surely we're going to see a retracement, at least a little bit, from whatever this did to SPY, which is all this here. So you would wait for the next clearest entry spot, and that's previous day low. And they actually delivered a couple of different setups. I mean, one, you do get this retracement into first standard deviation low. Not only is there previous day low there, and it's hard to see because of all the other indicators I have on, but it's actually a TWAP level, 442.31. So that is previous day low and a previous TWAP level being tested right below a daily gap. That this retracement at times has been textbook setup for longs, but given what we're seeing in AD and VOLD, their trends are not bullish. I mean, I suppose here we had a couple of minutes. By the time this breaks back down, nothing is bullish here, nothing at all. So that was a decent signal. If you didn't catch it from here, an anticipatory entry, and you're just targeting this lower tick level here, or lower TWAP level here, you could capture about 70 cents. So not too shabby. You also have the expected move low options market down here, which I'm not sure why you would hold for that, but you could. That could be like a target for a partial remaining position. That's a $2 move there. But what you see is a little bit of trim balance poking its ugly head up, and then we get these extreme closures. So these extreme closures, this candle is deep down here on tick. I haven't seen some of that for quite some time, but there we go. So we get that. Then you see we get an oversold, potentially strong selling. One thing I'm noticing is when we get strong selling and we get a tick extreme closure, that does seem to indicate a little bit more of a retracement. Now this was a heck of a retracement. We get a crossover, the market internal RSI starts to crawl back up, and we get a retracement all the way back up to this TWAP level again, the 442 that we rejected over here, which is also previous day's low. Then we get wicks right back into the daily gap. They bring it all the way back down again, and we just start to oscillate, and there's a lot of that trim balance now. The whole market's bearish. You're basically seeing a range balanced but towards the downside. it's definitely not as clean as I would like to see it when it comes to a range. So it was more of a range if you took into consideration most of the day, but it is downwards focused. So this gap, we come in here cleanly in between the TWAP, daily gap or previous day low, and the gap, and we give it all right back up. Notice this wick right around the first standard deviation high. So we did get per trend balance. We did get that entire mean reversion before we gave it all right back up. And no surprise at all to see that we hit the expected move low for the 0 DTE market and effectively stopped. See all these tick closures, extreme bear side. These were some nasty ones. 13, almost 1,400 stocks were giving it up right there on those particular candles. So quite amazing. No surprise to see the ad band incredibly bright, Vold mostly bright as well, and the MIRSI indicator starting to show oversold or strong selling again. And I'll be honest, I'm really impressed with these crossover signals. That retest, that little zigzag right there, what a perfect little retest signal. It perfectly was reflected in the price. Now, that is to be expected only when the divergence between SPY and the New York market is effectively nil. So, and that's what you're seeing here. I think we can effectively call this a mostly flat alignment or convergence, with the two SPY market and the entire New York market. So that was a lot to cover, and I didn't quite read it this way throughout the day. There was definitely a part of me that really wanted to see more retracement on this here. Since we had a lot higher price from the morning session when we hit this, I was hopeful that we could come back up here somewhere and finish the day out there. To the naked chart. So trend started out the day in the bear zone, extreme bear zone, with a value of almost 2. We beat out Tuesday's value there. Then there's that balance. We started to flirt with it by about 11. We yeet back up here into the strong bear zone, And JPAL, I don't think JPAL even came out today. I think it was just FOMC minutes, but apparently that was enough to move the markets, and that's basically where we stayed in balance. But if we go look at AD, so AD today was very interesting in the morning session. We were below balance, but weak bear zone. This isn't strong selling, but the fact that we start here shows me the market gap down as a whole. It wasn't just SPY or its constituents, but we break in high over to 850 some stocks in advancement. When you consider SPY is about 500, that's a fair bit of the market starting to push up. It did not last long though, and there's that downward channel that we effectively saw on SPY. So notice almost same price action. And the volume, look at this nastiness. I almost want to say, did the price stay? No, about 1140. Okay, volume gave it up first. So this is another thing that I think I iterated it at one point, but the volume is certainly more of a requirement when developing a sentiment read on the internals. Just something to note though is when you start seeing things like volume not making the same kind of highs and the same kind of action that that price is. Now, these values could be skewed a little bit. Volume, the VOLD measurement, I mean, these values are kind of silly. They're so massive. But yeah, we ended up way downtown, and I'm sure after close. Oh my gosh! Whoa! I did not view the extended hours data for VOLD yesterday. Yeah, that's nuts. So even though I was really hoping for some bullishness after yesterday into today, I wasn't counting on it. This kind of volume we're seeing, just there's no buyers. Nobody's buying. Everybody's shorting. Flipping over to multi-time frame TWAP analysis. Another day of the session and weekly and monthly TWAP levels all coming together to create quite the juicy range. So we kind of already covered this on the other chart, but just noticing when you have so many of these, it definitely creates kind of an anchor for price, and mostly the same for this area here. We've got another previous session range, these two white lines, but then we also have a monthly and a weekly TWAP level, and just look at all that price action right there. Strong wicks right around, clustering right below, wicks above. This right here, this is more of a retest into God knows what. I mean, we didn't quite come close to this range. I'm sure if I draw it here, it's always 0.5. Why is it always 0.5? Somebody needs to tell me why it's always 0.5. 0.5 of everything. 0.5 of a 0.5 of a 0.5. We break down 0.5 between these two lines and all the way down. Third deviation now. That's where we're at on SPY for the monthly. Turn off a lot of this garbage. Third deviation low on the month. 438's next. 438 is next. Then 435. 431. Yeah. We're just dragging that monthly TWAP. We were flat. We almost had something. And no, you didn't. Tuesday, slap in the face, and Wednesday, slap in the face. Honestly, at this point, I'm expecting us just to hit all this stuff down here. I think we'll start to see a little bit more of this record playing style price action. The needle's just going to scroll through the old order book and grab whatever orders are out there before we just keep dumping this down. I just don't think there's a lot of buyer strength right now. Qs, same deal. Mostly same deal. Lots of confluence between all these different levels. I'm gonna turn the session ones off. It's too noisy. Same kind of thing. Boop, 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 boop. Bing bong, right through all this stuff, right down, and we're weaker on the Qs for the monthly range, which mainly because, do I have, yeah, I've got all that on. So the monthly range, third standard deviation low, gosh, really? Yeah. No good. Russell, reminder, I mentioned the Russ. We got to have a good Russ. We got to have a good Russ, and we did not have a good Russ. So Russell, 2,000 stocks. The New York Stock Exchange happens to be roughly about 2,000 stocks. So yes, tech makes an impact, but the more I watch these internals, the more I watch Russ, the more I realize a lot of the market moves because of Russ. And I think it could be because the market is closer, or I should say the economy is closer to Russ than SPY or the big tech companies. Russ is like the lifeblood of the economy. It's all the small companies that are just trying to make it. So they're the ones that are going to be most affected by any kind of economic assessment being released, any data release, that kind of thing, jobs numbers, non-farm payroll, CPI, PPI, all the I's. Another strong weekly TWAP rejection down right on this monthly TWAP level. We oscillate around. I'm sure there's session levels. No, we just said see you later. Previous day's range. We're going somewhere else. We're going down here. Whew, God dang, man. Yeah, no strength in here at all. All the main indices, I'm sure Dow, same thing. Yeah, geez, we're gonna need fourth deviation. Oh my God. Yeah. Now this is previous month TWAP 347. If we don't bounce on that, man, I don't know what we're doing. Crazy stuff. All right, so I'm going to bring up some other market internals here that I haven't brought up. I actually did not know these were on TradingView. I thought they weren't on here, but just shows you got to really dig. You have to dig. So there are a handful of indicators, market internals for measuring S&P. There's probably some for the other ones, but S&P is good enough, that tell you how many stocks are trading within that index above the 100-day, the 50. There's all kinds. So these are really great just to give a good picture of how the market is doing. And they can be utilized in identifying tops and bottoms. And boy, I kind of wish I would have looked at these a little sooner. I got out of the habit of looking at these. So this is the 50-day. Obviously, the lower the day period, the more volatile the chart will look. There's not really much point in looking at candles, so I just have a line chart here. High contrast for the viewers. And gosh, I mean, look at this period here for 50-day. 50 days is really common for kind of the daily time frame. Then you got your 100, your 200. The main 90% of, so that's how you read this, is percentage. So 90% of stocks on August 15th, 2022, December 1st, 2022, and most recently, July 24th, 2023. So almost 90%. 88% of stocks in the S&P were above their 50-day. I've got 200. They're all going to show about the same, but I wanted to see 5-day. Yeah, so 5-day, June 30th was the last time we saw 90% of the stocks over their 5-day. We had almost 85% July 12th. Gonna worry about that one. So What I'm noticing though is for the 50-day, we're only 40% of stocks are above the 50-day. So this line here, you can see it. It's potentially a bottom, might not be a bottom, but it's a good indication that perhaps we'll start to see a little bit of slowdown. If we don't, if we get down to 25, I'm not going to draw lines for these little guys here, but 25 is the next step. So the last time we were at 25 was May 31st, 2023. So if we head over to May 31st, roughly about here. So you can see we've got, I just have a simple spider tracker indicator that I put together. I publish on TradingView. You can go find it if you're into that. We had a nice trending XLK, which is our technology sector. We had, I believe, XLY is consumer cyclicals. So those were both up. Consumer discretionary, rather, not cyclicals. Consumer discretionary and tech were up. So nice, right? And then we go for it. You also see average daily range for tech and consumer discretionary were quite high. Daily range was 3, and yeah, about $3 for average daily range for both of those. So we're not quite there anymore. The last hike that we had at the peak of SPY, July 27th, we were not feeling that range on any of the main sectors. We're starting to creep in towards volatility, though. You can see the average daily range is increasing, but now tech and consumer discretionary are coming down. And we get this nice tight range breaking down slowly as we break the 50 SMA. I mean, 100 SMA is next. If we continue to sell off into the rest of the week, we got about $12 to the 100 SMA and about 28 to the 200. We are going to hit the 200-day average, moving average on the day as 50% of stocks. So we're still roughly right there. We've got a bottom here potentially, but we still haven't hit 50%. We're real close. If we're going to go much lower, if anybody wants these indicators, you can screenshot this or whatnot. There's other ones, growth stocks above their 20-day. 20 days is another common one, and we're at only 20% of the growth stocks. So growth's taking a massive hit. Yeah, top. So 100 stocks from S&P above 20-day, I mean almost none, and above 5-day, basically zero for the top 100 stocks at S&P. So, and that makes sense. We've seen immense selling from the highs. We're now from the highs, we're down $20. If we make it all the way to the 100 SMA, we're $31 from the peak, the recent peak, and then roughly 47 if we actually retrace down to the 200. So I know not all that was market internal related, but I thought it was decent enough to go through. It's always important to look at the sectors if you are investing or taking a look at trading stocks outside of just SPY and Q and whatever else. So I like to try to dabble in different kinds of trades with different companies. So I keep track of which sectors are strong, which ones may be at the tops. This also does help build some kind of assessment for what SPY may do in relation to the internals intraday. If you peek over and you know which sectors are already maybe potentially at tops, like tech, especially consumer discretionary has been one that's pushing stuff around. Energy is another one. So if those are all weak, or rather if they're all over, quote unquote, overbought, then you might see some pullback on SPY. So as far as what to expect next week, or for the rest of this week, I think it was pretty clear, but we'll probably see more of the game. Pump up the morning and just sell it all off. So I just don't see any relief coming. But who knows? Maybe maybe we'll open up tomorrow $10 up on SPY. Yeah, that's not happening. Either way, hope you did well today. Hope you're enjoying the MIRSI indicator addition to the family. And if you've got any comments, please leave them. I've received some feedback on Twitter and Discord. I've seen screenshots with the MIRSI indicator and some of my other ones from some new folks. So that's really cool to see, and it motivates me to keep tinkering and keep finding new patterns. And I am actually trying to build. I've done it before with other things, but I am trying to build a strategy, an algorithm that will combine a lot of these measurements into one algo to rule them all. Uh, yep. Anyways, thank you for watching, and as always, happy trading.